The new jobs report is in line with expectations, showing job growth slowed last month. The Labor Department says the U.S. economy added 236,000 jobs last month, while the unemployment rate dipped to 3.5%. AB's News business reporter Alexis Christoforous is here to unpack these numbers for us. Alexis, this 236,000 is down from 311,000 jobs added in February. So what does this report tell you about the job market and the economy in general?
This jobs report is a solid jobs report, but it does show that that hot job market is gradually cooling off. So 263,000 jobs added, the unemployment rate at 3.5%, still near a 50-year low, by the way. Both these numbers right in line with estimates. But remember, the past couple of months, we've been adding about 300,000 to 350,000 jobs per month. As for where those job gains happened, leisure and hospitality, right? We sound like a broken record. Things like restaurants, hotels, healthcare, helping to offset those big job cuts we've been seeing in tech, finance, and entertainment.
Any surprises here or things that particularly jumped out at you from this report?
A couple of things. Actually, wages, which we keep a close eye on, so does the Federal Reserve, because they can be inflationary, rose 0.3% month over month, up 4.2% year over year. So no, our wages are not keeping up with inflation, and these numbers are not alarming. Another thing that stuck out to me, an encouraging thing, is the labor force participation rate came in. It ticked up a little bit higher to 62.6%. And what that tells us is more people are actually out actively looking for work and participating in the job market.
And that plus a lower unemployment rate, good news there at least.
Absolutely.
Did the recent banking crisis seem to have an impact here?
You know, it's really not part of this report because it happened a little too late to be part of this report. I think what you're going to see more than job cuts from the banking turmoil is that banks are going to get more skittish about how much they're lending, which means businesses may not be able to get the loans they want to expand their businesses and therefore expand their payrolls.
What does this mean for the Fed and any particular not job cuts, rate cuts coming up, or rate hikes, I should say?
I think what this shows us is that the string of 9 interest rate hikes so far over the past year and a half are starting now to take hold in the job market. So I don't think this report changes the Fed's mind about how it continues to need to raise interest rates. But I'm going to tell you, this report does back up other recent reports we saw that point to a cooling in the job market, because the number of people applying for unemployment benefits is on the rise. And we also see that unemployment benefits are a big thing that the Federal Reserve looks at as well.
All right, Alexis Christoforous, great to see you. Thank you.
Thanks.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.